October 29th, 1929. The stock market was a terrifying roller coaster, plunging down 12% in just one day. While millions of Americans lost their life savings, one man watched the chaos unfold and smiled. His name? Jesse Livermore. On that infamous day, he didn't just survive, he made a staggering $100 million. But here's the kicker. It wasn't about luck. Livermore was a master of market psychology, and he had a plan while everyone else was in panic mode. Picture this. As people screamed in fear and rushed to sell their stocks at whatever price they could get, Livermore had already positioned himself to capitalize on the downturn. He understood the emotional wave sweeping through Wall Street and used it to his advantage. Now here's where it gets interesting. Livermore had spent years studying market trends and behaviors, almost like an artist perfecting his craft. He was infamous for short selling, essentially betting against stock prices. On that disastrous day, while others were clinging desperately to their dwindling assets, he had the foresight to short sell stocks before the crash hit its peak. Think of it like fishing in a stormy sea. Most fishermen would pack up and head home as the waves crashed around them, but not Livermore. He knew that when the waters got rough, that's when the big catches surfaced. The deeper understanding he had of market cycles allowed him to thrive even when all seemed lost. And that's not even the best part. After making his fortune during the crash, Livermore didn't just rest easy on his laurels. He turned right around and did something extraordinary. He invested again because he recognized opportunity where others saw disaster. This fearlessness in recognizing patterns is what set him apart from average investors who simply succumbed to panic. But let's not romanticize this.